A really common question that I hear all the time. I'm a realtor in Des Moines, Iowa. Hi, my name is Heather Wright, and I am asked the question regularly. What are interest rates doing? Do you think that interest rates are going to go down? I'm recording this video at the beginning of 2024, and probably for the last year or even more, we have steadily seen rates increase. And probably for the last half of 2023, we saw rates were pretty high rates that we haven't seen, since before 2010. That's when I became a realtor. And actually, what rates were doing before that, I don't really know because I wasn't interested in it. But when you have years and years and years of historically low interest rates, of course, higher rates around 7%, let's use that as an example, rates around 7% seem like they are out of control, ridiculously high. But I guarantee if you ask your parents or somebody's parents what they had for an interest rate for their first mortgage, they will tell you a tale that will make 7% look pretty good. But the purpose of this video is to talk about, will interest rates go down? Will they drop in 2024? And the short answer is, I don't know. Nobody actually knows what's going to happen, unfortunately. I wish I had a crystal ball. I wish I could tell you exactly what was going to happen, but I can't. So, that being said, I can tell you what I do know. And I know that the Fed has said that they're going to drop rates at least 3 times in 2024. And that's cool, but it still begs the question, when and how much? Dropping a quarter is nice. We appreciate that, but come on, dude, that's not really a lot. If you are thinking about timing the market to get a lower interest rate, well, that may not necessarily work for you in the long run. And here's why. Well, number one, we just talked about it because nobody knows what the future holds. So the rate that you might be holding out for may never exist again. Today's rate might be the lowest it ever gets. We just don't know. Hedging your bets on something that is not a guarantee is always a risk. There's also something to be said about what will happen if rates drop. What will happen if rates go down to 3%? Now, I really don't think we're going to see 3% ever again, but who knows? So let's just pretend that interest rates go to 3%, which is an amazing rate. Everyone wants 3% because it's so low. Then everyone is going to be out shopping for a bigger house or a house instead of an apartment. Everyone's going to be shopping for the same thing that everybody else is shopping for. That's great that you're going to get 3% interest. And this happened in 2020 and 2021, where the low interest rates were amazing. And there were so many people shopping for homes that ended up driving the price up. Inventory was low then, and it is lower now. And so if rates drop, we're going to see people competing against each other, driving prices of the homes higher. And that's going to cost you more because you're going to pay a bigger price for the same home. Whereas if you were to purchase that home when the interest rate is high, relatively speaking, and so let's say there is a home that is exactly what you're looking for, that's on the market today. Well, it's January. It's been a little bit slow. We're just coming off the holidays and the market for the spring has not heated up yet. So it's entirely possible you could go into that house, make an offer to purchase it, and not have any competition. There might not be any other buyers out there looking for this same property at the same time you are. Now, it's possible that there might still be competition. We're in kind of a tricky market right now. About anything goes. My point with this is you could potentially get the house that you want at the price that you want with an interest rate that you don't want. The interest rate is higher than what you want, but you could still, if all the numbers shake out, let's assume that you can afford that house at that rate today. And if that keeps the price of the house lower because there's no competition, that's amazing. But then let's say by the end of the year, the rate goes down significantly from where you purchased your house at. You have some options. You could refinance. A lot of lenders are offering, it's not really a deal. A lot of investors behind the rate that you're getting today are willing to offer a refinance at low or no cost. later in the future in the event that the rates go down, which is really great. And even if they don't offer a low or no cost refinance option, you might still be able to just refinance. And while that could cost you money, it's entirely possible it would save you in the long run. And in that theory, you would pay a little bit more for your house payment today because your interest rate is higher than what it would be in the future at that lower rate where you would refinance and essentially lower your monthly payment, saving significantly over the life of your loan and not have competition when you're making the offer to buy the house. And because we're coming off of a year that was kind of funky, there were highs and lows for sure, but overall real estate sales were down. So a lot of investors have increased interest in getting you to finance a property through them. And for that reason, there are some loans out there that are offering money back. I just had a buyer get pre-approved and the rate was pretty good, all things considered, but also the investor is giving them 2% toward their down payment and closing costs. 2% on a $300,000 house is $6,000. Well, that's free money and nothing to sneeze at. That's a good deal right there. Knowing that the rate is decent enough to get the house that you can afford at the price that it's offered at today. But if you were to compare that to a year from now, that same house is probably going to go up in value because we're probably going to continue to have an inventory shortage. Of course, we don't know that either. But in this scenario, if rates go down and inventory is in higher demand than it is right now, then prices are going to go up. You'll have grown your equity. You can refinance. You'll be in a very good equity position if all of these examples are true. Now, of course, I can't tell the future. God, I wish I could, but I can't. And so it's entirely possible it could all go to hell. I don't know. And I don't want to promise you that everything is going to be hearts and flowers when it's possible that it's not. But these are the things to consider because if you are waiting to buy because you're waiting for interest rates to go down, you're in good company because other people are waiting too. And that's going to drive prices up. So you now have all of the information that you need to help you make a totally informed decision on what is going to work best for you. And so if you are looking for a home in the Des Moines area, the Greater Des Moines area, all of the suburbs, my team and I would love to help you. So you are welcome to schedule a call with us or visit our website and look at the properties that are currently available. And we also have buyer guides and timelines. We have a lot of resources even on this YouTube channel to help you become informed on what to expect in real estate. So thanks so much for watching, and I'll talk to you soon.